Hi, my name is Edoardo Zarghetta. I'm a board member at TraWell Co, a company operating in travel retail services. We have recently presented a business plan that should take us to 2027 with some very strong results. And that's a presentation that I would like to share with you today. Hopefully you will find it interesting. This is the latest presentation that we have presented to a number of institutional investors in Milan during an investor conference with the Milan Stock Exchange. And it is our business plan to 2027. So the roadmap that we set for ourselves to come very strong for the next 5 years. What you will see here is the objectives that we are giving ourselves and the financials that come from our actions. This is just to give you a flavor of what we do. We are an airport retail service company, but we have some very strong commercial areas inside some of the leading airports in the world. So we really want to leverage on this retail space that we have and start selling more products. We already sell some travel accessories, but we want to sell more products to increase our revenues. TraWell Co offers a quite unique exposure. It has a quite unique positioning. It gives exposure to the travel and retail services. Both industries have a very high growth path. We have 25 experience at this, and usually you can invest into airlines or airports or duty-frees. Our company is different because we operate services inside airports and not, we don't sell only products. We're not mainly a retail company. And therefore, we think that this positioning is quite unique. We aim to get this amount of the spending in the travel market, which is extremely interesting. So we are a diversified retail service company. It's a multinational group. We operate in many countries, and our offering is covers luggages, where we have services of luggage wrapping, travel accessories, baggage weighing, tracking, lost and found assistance. We also participate a travel app that offers digital services to travelers. It's also a company listed in the Milan Stock Exchange. It's called sostravel.com. And in 2019, we started a push into different commercial activities inside airports. So we started to open the first business center and baggage storage, but we intend to go beyond that and focus on wealth, focus on services for passengers, both in the arrival and the departure areas of international airports. The main focus of our expansion into new services are a medical airport, which is basically a center that is an upgrade of what airports have been providing during the COVID, where they provided testing centers. And they realized that they need to, to improve their medical offer to passengers. So in a couple of airports, we've been chosen to operate and manage these new areas inside the airports. And the other service on which we are focusing is a telehealth service, which allows our clients to access a doctor in their own language through our own SOS Travel app. It has a very interesting offering because it allows passengers to pay only for the 14 days that they use the service. And we think that the passengers would be very happy with our offering of telemedicine. Both services will launch in 2023. This is our presence globally in the world. We have 110 shops located in 34 airports over 12 countries. We have a fantastic team of over 200 employees, and we serve over 4 million clients every year. So this is our geographical reach. As you can see, it covers the entire world. Our major partner in this business are airport operators. 67% of the group revenues come from airports where our concession terms is longer than 4.4 years. This makes us very comfortable predicting our cash flow and makes our operations very, very stable. We are the largest company in this market. You can see we have a market share of 6%. That is about another 10 companies that qualify into this chart. But we are the largest in this market, and we intend to grow further. This is the strategy that we have for growing. Where we know the market really well, where we have our reach, we want to go direct. So with direct concession with the airports. And when we start to look at the areas that are a little bit further away, where we don't master the knowledge of the country so well, we'd rather go with partners in the form of a joint venture or franchising agreements. So this is how we intend to grow the business between now and 2027. There is a little bit more detail here, where in the airports that are large enough, over 8 million Europe, mainly in Europe, we will go directly, and we will do M&A to acquire some of the competitors in the area, and we will bid for concessions ourselves. On a global scale, where the conditions are good, we want to operate a franchising business. And when there is the opportunity to work on a whole area with a strong partner locally, we want to open joint ventures. We currently already have operations in these three segments. We just want to expand them to bring us to 2027 in a very strong shape. This is how we intend to generate growth. We really wanted to put the investor at the center of every operational action that we do between now and 27. So we have organized our operations in the following form. We will bid for new space or work hard to renew the current concessions and develop a new store format in Europe. And this is aimed at increasing the EBITDA and bringing in more EBITDA into the company. We launch a program to improve the point of sales, the shops, to make them more enticing and to be able to sell more products inside the same areas. This should bring more revenues into the company. And the third pillar of our growth strategy is to expand the digital service offering. We already have the digital concierge is a digital service that we offer. We want to expand that service into more markets, and we want to start selling more services digitally. This will bring a good impact on the net result of the company and in the income statement as a whole. And lastly, the company has recently started a new push in investor relationship, putting the investor at the center of the management of the company. And the objective of these actions is to support the share price, increase the liquidity, and realign ourselves to the ratios that are present in these sectors. So this is what you're going to see in the presentation. We have included in the financials only the digital and the current services. We have not included the new services, the medical, airport, and the doctor travel. When they will be started and they start to generate money, there will be an update on the plan. We based our forecast for growth on the ACI, the Airport Council International, that predicts that the traffic of 2019, pre-COVID, will be back in 2024. We have seen signs of this happening already in 2023. If we look at our own airports, they are almost running at the same level of 2019. And also some airlines have come out with the same kind of feeling, namely United, American Airlines, and Lufthansa have upgraded their forecasts, and they predict that the 2019 traffic will be back already in 2023. These are some of the three strongest assumptions in our plan. We only present a plan that includes current concessions. We embed price increase from 2024 in Europe, and we have allocated 1 million euros of capex to refurbish the strategic point of sales that we already operate. Business plan for 2022 to 27 looks very good. You can see a growth in all the lines. EBITDA margin at 22%. EBIT very strong P&L. What we also like to see is the reduction of the debt and the company becoming cash rich from 2020 at the end of 2025. This is how we predict the group financials to move. Some of the revenues will not be back because we have started this franchising agreements. So we have turned some of the areas into franchising. So we are able to capture the EBITDA from those areas, but we will not have the revenues consolidated into the group balance sheet any longer. This is how we see our cash flow and net cash position. We are very pleased. We already have a good plan for reducing our debt, which was mainly the result of the 2020-2021 pandemic. And we are happy to see the net financial position becoming positive at the end of 2025. Some more details about the debt evolution. You find these charts in the business plan on our website in the investor relation part of it. I will not dwell too much into all the numbers that are in the income statement or the balance sheet, but for your comfort, you will find them into the presentation. These are three comments from our CFO. The CFO wanted to point out that the revenue growth is there due to the growth in passenger numbers and the normalization of activities into airports that will open in 2022. So they will be operational for the first time full year from 2023. Some of the EBITDA increases is also attributable to our cost structure, the way it is organized. And the financial position is improving thanks to the current pace of repayment of the loans. This is something that is very important to us at the moment. The company has engaged a new investor relation team and is targeting a larger investor base than previously. And wants to have more constant communication with the markets and more in depth. So there would be a difference between how we've been communicating in the market. There is the 2022 column, and the 2027 column is what we want to achieve. Obviously, it's not going to happen in 27. It's going to happen before. It's just put there as what we aim to do between now and 27. So on top of the listing on the Euronext growth market in Milan, we are going to be listed in a US market very soon. This is 2022 objective. We already covered from two research houses, Banca Intesa, the first leading bank in Italy, and Arrowhead, investor relation platform in the United States. For the future, we have in mind to also get cover from a mid-tier US investment bank that has more connection and investor access with asset managers and family offices. From the financial information point of view, we will grow our reporting. We will start to report quarterly, and we will have the reporting required by the US market as and when we start the listing and we start the trading. And on top of the communication that we already do with our investors, we are launching a CEO letter that will go out on a regular basis, perhaps monthly, around 10 letters a year. And result presentation and call will be held live every time the company has results out. We can see there that the share of the company has suffered a sort of illiquidity period. This is due mainly to COVID that has affected our EBITDA and our revenue generation. We want to invert that, and we're working very hard. And we think that this new investor relation push will help the liquidity and the share price. In order to be able to attract investors that have ESG requirements, we have identified 5 actions that should put us into a position to be invested by ESG investors, and that is to move on to 100% compostable film to contain the use of energy from our machines, which is not metered because it's offered by the airports, to a software that controls and reduces consumption. We will resume the training of our airport staff. This has been a strong point of our company since inception 25 years ago. We stopped during COVID. We will start again. We do these trainings that really empower the airport operators in sales skills, communication skills, safety skills, and social skills in general. So we think this is a very good point. Our office staff has been offered extended work from home, and this has a positive reduction of CO2 emission. And lastly, on the governance side, we are intending to add one or more women to the board. This is a snapshot of the recent price action of the share. It has moved flat to the main Milan index. It has outperformed the duty-free shops that we take as comparisons. And we have a positive outlook expressed by our analysts. Just today, the Banca Intesa has moved the target price from 7.3 to 9.1 euros. This is 85.71% upside from current price. So we are very, very happy with that, and we will need to update this presentation with the new information. We wanted to provide you with a little bit of clarity on where we trade in terms of multiples. The current multiple of the company is quite low. With a cash price of 5, if we maintain the current multiple of market cap over EBIT, our share price should move according to this column during the life of this business plan. If we were able to recapture the 5-year average multiple that we held in the past 5 years, which was 12.4 times, our share price should move according to this column here. As you can see, would be a great result for shareholders. Obviously, the interest rate environment is different. We'll see where we position between the current multiple and the historical multiple. What we also wanted to highlight, though, is that some of the competitors or comparables that we have in our radar trade at a much higher multiple. So it's not to exclude that we will be able to push our multiples higher, providing a very good return for our shareholders. What we have presented in this plan is also the result of 25 years history of the company. What you see here is the share price and in the last period when we were listed in the Milan Exchange. As you can see, the share price has been responding extremely well to this increase in EBITDA that we announced in 2016-17. We are now at the cusp of the same situation. If you look at our 6 months results, our EBITDA has exploded. We had an EBIT for the first 2 years for the first 6 months of the year, of 2 million euros. We think that the share price will move from here and will respond to the increase in EBITDA. We also have a warrant out that expires at the end of 2024 with a strike price of 8 euros. The current research from Intesa pushes the target price at 9 euros. Should that warrant go in the money, we intend to use the proceeds of a capital raise to acquire competitors in the industry of baggage wrapping or in other interesting opportunities inside airport service in general. Thank you very much for your attention. I hope to meet you in person soon. Goodbye.